Vaibhav Sanghavi is CEO at ASK Hedge Solutions, joins us with his thoughts on the India story. Vaibhav, lovely to have you in the show. Thank you very much for your time. Join the dots for us because this is a very critical time, very uncertain times. You're talking tariffs and the Indian markets have lost ground. How are you looking at the Indian market and macro picture?
Hey, Tanvi, first of all, thank you very much, and it's great to be here. From an Indian market perspective, I think as we've seen in the last 5 months, there has been a considerable correction, not only of the benchmark indices, but from a broader market perspective as well. Most of the stocks probably have corrected more than 20-25%. And at this point in time, as we see from a valuations perspective, I think the frontline large cap valuations are looking pretty reasonable to kind of start kind of do some bargain buying. Now, while that is the frontline assessment from a valuation standpoint, but what's happening actually is that if you see post the 2 to 3 quarters of suboptimal GDP growth, we've seen a coordinated policy action both from the monetary side and the fiscal side, wherein from a monetary perspective, we've seen some reduced, the rates have been reduced, liquidity being eased, and norms being kind of eased from a lending perspective. Whilst that is the case from the monetary side, from a fiscal side, when we talk about both central and state governments, of course, have been resorting to the welfare spending. But from a state perspective, this is the first time after 10 years of clear focus on supply side. This is the first time when they have given something for the consumption in terms of the tax rebates. So my estimate is basically for FY26 growth, we would be probably seeing some amount of surprise, especially on the GDP growth, ultimately turning into the earnings forecasts, kind of getting stabilized or probably moving up in the second half of FY26.
Right. What sectors look attractive to you at this point, Vaibhav?
So when we talk about sectors, I think one change we will probably see in the constitution of the market movement is that as against the last 5 to 10 years of largely industrials kind of grabbing the whole space, this is the time when the portfolios will start shifting to consumers, starting from consumer discretionary to consumer staples, at the second leg. But consumers is a story to play for the next couple of years at least, where one, that the portfolios are underinvested, and two, that because of the stimulus which the government has kind of given, we may see a good size consumption boost coming, from next year onwards, or probably next financial year onwards. So it's just time to probably load up those. In addition to that, that private banks continue to, look cheap. And that's something to have a look at it. Financial services is something as a sector which we generally like, and from a longer term perspective, of course, renewables is a story where we are placing our bets as well.
What do you not like in the Indian market?
I mean, this is a time when, while government is continuing with their capex programs, my sense is basically that this is a space where you will see some amount of downgrades in terms of the order inflows, especially, and along with some amount of pressure in terms of the earning growth forecast as well. So while this space has been considerably owned as well, my sense is basically this is a sector where probably in the next 6 to 12 months, we may see some amount of relative underperformance. Not at this point in time, purely because they have been fairly beaten. Maybe probably at some recovery, that's a space to probably look to go underweight or probably short as well.
Right. I do also want to get your sense on how you're looking at tariff tensions at a time when, while we're having this conversation, Commerce Minister Piyush Goyal is trying to work out a deal with the US on trade.
See, I think from a trade perspective, in my view, India has been very practical enough in terms of striking a trade, or probably potentially striking a trade deal, because the visit of Honorable Prime Minister to US and subsequently the back channel talks in terms of the trade deal, in our view, is that it will probably get soon, from a country perspective. So I think India has taken a very practical stand in this and have actually incorporated few changes in terms of reducing, custom duties on EVs, and Harleys of the world as well. So, in my view, I think this is going to be not much of a big issue, at least from an India perspective, as they start also procuring some amount of defense expenditure or defense equipment, from US, wherein it would potentially kind of balance the trade deal. So I am optimistic, and I'm betting on the practicality of the current dispensation in getting this done pretty quickly.
Pretty quickly. Okay, before we go, I also want your quick comments on the currency weakness.
See, I think currency weakness, India has that, because of the structural current account deficit problems, and especially coupled with in the recent months on the FPI outflows, we have seen some amount of pressure on the currency. Whilst the dollar index has kind of earlier strengthened to close to about 109, 110, we took a beating on that. But have not been able to recover after the DXY have kind of gone down to 105, 106 levels as well. My sense is basically it will be in line with the longer term averages of INR depreciation. Of course, there will be always a time period where you will find that a little aggressive, but on an overall basis, we will be in line with the longer term averages. And lastly, I think the better oil or softer oil prices will also kind of help in terms of the current account deficits as well. So I'm not expecting huge depreciation from the current levels, going forward, at least in the next 1.5 to 2 years.
Vaibhav, lovely to have you on the show. Thank you very much for joining us and giving us your perspective on the Indian markets. Okay, one more look at how Asia is shaping up right now.